So, hi guys, welcome back to Muthukumar Store. In this video, we are going to discuss about the advantages of mutual fund. Yeah, the first advantages of mutual fund is it is professionally managed. So, when you are investing your money in mutual funds, it is being professionally managed by the fund manager. So, fund manager has a great knowledge about stock market and they are also having a good experience in the market. So, they are having adequate research before investing, so they are also having a prudent investment approach. So these things will help the investor to grow your wealth. And mutual fund investments are simplifying the process of investment and holding securities, because when you are opening a demat account and trading account with the broker, you have to pay brokerage and you don't know the problems and you don't know the what to do and you don't know the procedures when you are having a demat account when you buy stocks. So if you are not having a proper knowledge, mutual fund provide this kind of professional management service. So this is the first advantage. The second advantage of mutual fund is it provides a affordable portfolio diversification. When you invest in a mutual fund, you can invest just 500 rupees. So with 500 rupees you can have an exposure to a range of stocks. So when you invest in a scheme, that scheme will invest in 10 or 20 stocks. So if you are investing in that scheme, your 500 will be, you will also be a owner of those 10 stocks. So with that 500 you are also having a diversification. So when there is diversification, there is less likely you will lose money, so there is less risk. So this is helpful for you for as an investor. The third is economy of scales. With the amount of 500 and 1000, your money cannot be professionally managed. If you're going to an external professional manager, he will charge a higher amount. So you cannot afford it. So mutual fund is the best way for having a professionally managed service at an economic rate. Yeah. And the fourth advantage is liquidity. When you buy an investment, it must have a liquidity, because when emergency occurs, you will sell that asset or you will pledge it. Then for that emergency you will use that money. So when an asset is not having that liquidity, when you cannot see a buyer, for example in real estate, when you are having a house or a property, it is difficult to sell because the property value is very much higher. So to find a buyer it is very difficult. So liquidity is a major role while you invest. So mutual fund has a good liquidity. If it is a closed-ended fund, you can directly sell it in the stock exchange. If it is an open-ended fund, you can get back your money. You can provide it to the mutual fund by giving your units to the mutual fund company. And liquidity is very high in mutual fund investments. And the fifth is tax deferral. The amount grows in mutual fund is not, you are not paying tax. When you sell the mutual funds, when you are realizing the profits, then only you are paying tax. So when you are growing your investments in mutual funds, it is definitely helping you to reduce the tax or defer the tax. So when you are realizing only you are paying tax, till that you are legally building your investments. And sixth is tax benefit. So most of you would have heard about ELS scheme, equity linked savings scheme. Under 80C benefit, you can reduce your tax up to 1.5 lakhs when you invest your amount in ELS scheme. So it is also providing tax benefit and convenient option. So you can sell a part of the asset. That means if you are having 100 units, you can sell 10 units. But if you are having a real estate property, you cannot sell it partially. Yeah, this is the convenient option available in mutual fund. And then investment comfort. Very little documentation needed for a mutual fund scheme. So you can invest very easily. But if you are going to other asset, it is somewhat complicated. And there is regulatory comfort. SEBI, Security Exchange Board of India, is the regulator of mutual fund. So investors are being protected. And the last is systematic approach to investment. When you invest in mutual funds, they are providing you systematic approach such as systematic investment plan, systematic transfer plan, systematic withdrawal plan. These kind of systematic approaches will provide you discipline and focus on your investments and goal. So these things will help you to grow your long-term wealth. I hope so this video was useful, guys. Thank you. Have a nice day. If you want to support me, please subscribe this channel and support me.